Hi guys, happy Easter to everyone. As always, I'm always happy to be with you. So today I'm going to move straight to the point. I'm going to be sharing the strategy that I use for Crash 1000. So in trading Crash 1000, it's not like any other of the Crash and Boom instruments. So Crash 1000 is very similar to the way I trade Boom 1000. I dropped a video on Boom 1000 a couple of days ago, and I hope you go check it out. It's an awesome strategy that is still working. I'm still using it to take up opportunities in the market. So, without further ado, I'm going to go straight to uh, the strategy on Crash 1000. And like always, I always use the best, or rather, the worst of the worst scenarios or situations in the market for illustration, the worst of the worst cases in the market for my illustration. So today, the only indicator we'll be using will be the RSI, just like we traded Boom 1000 a couple of days ago. I also use the RSI for this strategy. So please ignore these indicators, um, like I cited in the Boom video. Ignore these indicators, the moving averages and the parabolicers and Bollinger Band. All we need is the RSI. The RSI, just this indicator. And the settings for RSI is default settings. So the settings remains the default settings. So let's quickly scroll all the way down to the worst of the worst scenario. I think this happened uh, a couple of days ago. I remember trading it and I made some short videos. So before I continue this video, I would like to show you some live trades that I took. Yeah, this is it. This is the worst of the worst scenario for the Crash 1000. I think in this case, the RSI actually went all the way to 99.98. Yeah, 99.98. So this one went all the way. You can see the spread. The spread was continuous all the way. You can see RSI even got to the overbought region, and it kept going, it kept going, it kept going, till it got to 99.98. Right? So like I always say, the first approach to trading this strategy will be um the dollar cost average, like I always use, right? So the dollar cost average, I like to start, unlike the boom, that I start below 0 point 0 point, right? 0 point has to go below 0. So you can go, sometimes for boom I wait till it gets to 0.50 before I even start to trade uh, my unit lot sizes. Remember, I mentioned that in trading Crash and Boom, to be safe, if you intend to use one lot for that trade, it is important that you break it into pieces, right? Like I always do, I break mine into pieces. So I'm still going to be using the $100 capital for my illustration. So if you're having the $100 capital, which I think is a sizable capital for a small account, right? So I still stick with the 0.20, that's 0.20. Though the Crash 1000 do not have as much value as the Boom 1000, but it's close, right? So 0.20 won't give you too much profit, but I'll tell you exactly how I went about my trades. So now, the moment the RSI got to around 99, you understand, 99, I start to contemplate or start to plan to take the trade. So 99 is around here, right? So when the RSI gets to somewhere here, you can see where the prices are at that point. The price is around here, right? So from this point, you start to contemplate to take the trade. So you can take the trade, but in not in most cases, I allow my drawdown to continue. But just to be safe, you can just start with a very tiny lot, very small lot size, maybe like a micro lot size for 0.10 or 0.05 if you have a small account. Or if you have a similarly big account of like $500 to the thousands, you can use 0.20 at this point. So I started taking my trades above 99 for sure. Started taking my trades above 99 for sure. And the drawdown continued, right? The drawdown continued, it kept going, it kept going. You can see all the way it kept going, you know. Then the first crash happened here, which was not enough. I think at this point I had taken about five trades, 5 to 6 trades, right, at different intervals. So at 0.20 each. And I think my capital was less than 100. Yeah, it should be around 50, right? So the first spike happened, which was still not enough to break even, close to break even, but it was not enough to cover up the entire drawdown from the very first trade that I took, right? So I was patient enough because I've seen, like I said in the boom video, I've seen in my experience that most times when the spread runs deep into RSI 99 point 90.98 and so on and keeps going, there's it's most likely going to have multiple spikes. So I waited for it to spike. You're gonna see it continued spiking. Yeah, so this is exactly how I trade. It is not every time uh the crash 1000 spreads all the way to RSI 99.9. Even there are times it gets to 100, and even when it gets to 100 it keeps going, right? But it's a rare occurrence. Sometimes maybe once a day or twice or thrice in a week that this rare occurrence happens, right? So but you always want to guard your account against any unforeseen or any adverse effect from these long spread, right? These long movements, this long drawdown. So for every trade that I plan to take, I always put the worst case scenario at the back of my mind, right? I keep such occurrences handy and in check. So that is why for every trade I take, my safe my safe first entry point would be above for crash 1000 will be above 99. It must get to 99. Yeah, there are periods where to not get to 99 before the spike happens, right? But I really don't care. So I'm happy to miss such opportunities. So I try to go for the opportunities that give me a higher percentage of success rates, right? So sometimes I wait till 99.50, sometimes even higher, but uh, above 99 is just fine. Then break your lot sizes into pieces. So I'm going to show you a video on the actual live trade I took on this uh, event. This is a very good example of what I was saying about the worst of the worst scenarios. You can see that the RSI is way above uh, 99, right? 99.93. Then you can see the spread, the huge spread happening so far. And you can also see that I have some trades while using the dollar cost averaging approach. So these are small lots, 0.20, 0.20 in four places. I'm looking to add a final 0.20. So I'll show you how it turns out. So the first spike has happened, and I have about 6 trades active uh, on a $50 account. So all the trades have not been covered up, or um, the profits against the losses are close to break even. So I'm still going to leave these trades for as in expecting multiple spikes, because in my experience I've seen that when very often when you have a huge spread like this, there are bound to be multiple spikes. So let's just see how it goes. Another spike just happened, and this has almost covered up all the trades. So we have $5 right now profit. So you can see that this strategy is very effective, and this is the worst of the worst case scenario. RSI entering 99.98, almost 100, you know. So this is the worst of the worst case, and you can see that just infusing the dollar cost average approach into a small account, and you can see that this is even a $50 account. It's a $50 account. So, and the drawdown that was in this account was around 11 or $12, even after all these massive spread, just 11 USD. Yeah, this is a very effective strategy. So I'm still expecting one last spike, but it is safe to close the trades from here. And my final spike just came through. So now let's see, this is 12. So we just have to close it. So like I always say, this strategy, the worst makes provision for the worst of the worst cases in the market. You know, so it's very effective. Give it a try. So that was the video. So I'm just going to point out that these strategies that I'm giving you guys, they are not, yes, they are 100%. I try to think that they are 100% successful, but there's actually no strategy out there that's completely 100% successful. So there are so small mega tactics that we put here and there to just achieve the best possible outcome from each and every strategy that I use. Now, overall, when taking trades on crash and boom, something there's something I do that I consider to be very important to me, and it should be very important to every trader out there. Knowing the overriding trend. The overriding trend is the long-term trend, where the price action has been facing, for in a couple of days or weeks or months. It's also very important to be able to see these things so as to inform yourself on, the bigger picture, what's likely going to happen next. So I also like to use the monthly time frame to check, okay, where is crash at right now? Is it at the top, of let's say the highest high? Is it close to get achieving a higher high? Is it close to achieving a lower low? Right. So it's also very important that when the crash, in the case of a crash, when the crash is at its low region, um, spikes are risky. Spikes are very risky. So let's check the monthly time frame. The monthly time frame which is showing that the crash 1000 has achieved its lower low, or probably lowest low since the inception of the instrument, lowest low region. So in this region, spikes spikes are very risky. Catching spikes in this region are very risky, in the sense that there's going to be a time that this instrument is going to decide to go all the way back to retest the highest high, because it is still under the volatility genre, right? They are all volatile, whether be it volatility 75, crash 1000, step index, jumps, as the case may be, right? They are all volatile. So, which means that at some point in time, they will always retest the highest high and the lowest of the lows. And trust me, in between, this is a monthly time frame, right? This is a monthly time frame. In between the highest high and the lowest low, there are the range of volatility is very wide. You can see how wide it is. And when a range is this wide, there are a lot of abnormalities that happen in between, right? Abnormalities in the sense that there are going to be massive drawdowns that are not going to work exactly as planned, right? There are going to be movements that are not going to follow the strategies according to how we use them, right? And there are going to be new strategies to be discovered in between when it decides to go back. So it's still at the lowest of the low, right? So we need to be very careful. We need to be very careful. The best possible time to trade spikes for crash will be at the highest high, because you know that any movement above, there's bound to be a crash, or a crash is imminent. So no matter how bad the spread or the drawdowns are, crashes are always imminent. But you see this point, the lowest low, if it actually decides to come back all the way up, it's very possible. It's very possible that multiple spikes will not be happening, you know, in your drawdown trades, even if they get to as high as RSI 99.9. Just a little spike, then it continues. So this is also something we have to take to mind. So that is why it's important that you measure your lot sizes according to your account size, right? You use the dollar cost averaging, break into pieces, so as to give yourself a chance to take the best possible trade in the market, right? So yeah, this is that's about the crash 1000. Crash 1000 is a very good instrument, an instrument that you can hardly lose in if you follow suit with the strategy that you are using, and while keeping safe by using your RSI, and with just being patient and waiting for it to go at least above 99 points, yeah, 99 and above. So the next strategy I will be giving will be how I trade the lower numbers for crash and boom. So such as the crash 500 and the crash 300. So like I said before in my boom video, all the crash and boom have a particular way. They are unique, in themselves. They have their unique way of trading them individually. So be patient. Maybe in a couple of days I will drop a video on uh, crash 500 or crash 300. Thank you guys for watching, and do have a wonderful week ahead.